Okay, welcome back to Yorba Radio, also streaming to you live on yorbamedia.com. I'm your host, Michael Yorba. Thanks for joining us. All right, my guest is our regular guest, Nick Santiago, President and CEO of InTheMoneyStocks.com. Nick, thanks for coming back on the show, buddy.
Thanks to have me, Michael.
My pleasure. Now, our previous guest had a trading room that they run all day. You do the same thing, too, though, right?
I do. We have a trading room that runs from basically 9 a.m. to 4 p.m. You could look at our desktop. You could look at exactly what we're seeing. We'll discuss swing trades. We'll talk about the day trades that we do throughout the day and exact levels, entries, what we're looking at. We'll also, it's fully interactive for all the members and participants to ask as many questions as they like.
Good. All right. And they go to where? InTheMoneyStocks.com just to open it up, or is there anything else?
Yeah, you go to InTheMoneyStocks.com and go to our intraday stock chat page, and you'll see all the information there. You could sign up, take a free test drive, 7-day free trial, and give us a shot and see what we're made of.
Sounds good. All right, Nick, let's talk about this stock market. And let me open this up. You know, I kind of like to mix it up with you a little bit on trading because we trade similar to each other. I took a little while ago, I posted a blog here. I was looking for retracement levels, and I think it was a 1209.62-ish. We're right there at that level now. What's your thoughts on what's going on?
Well, right now, if you remember last week when I was on, I talked about the 1250 level. I said that would probably be tested, but as long as price doesn't close below it on the cash S&P, we get a shot to go up higher, ultimately to around 1230, maybe even 1260. I really don't think we're going to go much higher than 1260 before we start coming back on heavy downside. Plus, we're also into the cycle time frame now where we're probably within the next, I'd say, 10 days or so, we could come into some heavy turbulence.
Yeah, you said a couple of weeks ago that this was a time frame right now for your cyclical analysis that we're coming into now. So what are you looking at? If we rally into it, pull back out of it, what's your thoughts?
I think, well, obviously right now we've staged a 4-day rally. Last Friday we were down 300 points.
Yep.
That was really a sucker's decline because it happened right before options expiration. So what happens now is the institutions take the market up, get all those people that, especially the small retail options trader that bought puts on this market essentially is stopped out now, or their option is going to expire worthless tomorrow. So they're out of the game now, and anybody who went short there at that level didn't wait for the close below 1150. They're obviously in a lot of pain right now, and they're getting squeezed up. So, yeah, we could have a little bit more. I would probably look into next week's Fed meeting, which I believe is going to be on the 21st of September. There's a nice turning point around that time.
Okay, and again, option expiration week, anything can happen.
Anything can happen, and you know when you look at the market last week, I think when I was on Thursday, I said we could pull back, and as long as we go back, test the 1150, and we don't close below 1150. And last week we closed exactly at 1162 with a real big robust rally on the 12th on that Monday. So even though the market gapped down early, you had a big rally, and we never closed. We never had a closing print since the last time I spoke to you below 1150 on a daily close. So, yeah, the market's got a little bit more upside, I think, in the tank, but not all that much.
Okay, got it. Copper. You'd mentioned that you're bearish on copper a while ago, right? Tell me about it.
Well, copper has
now this
really
is futures, right?
Yeah, copper futures.
Okay.
They've been very, very weak, and you can even look at the copper stocks like Freeport-McMoRan, Southern Copper Corp, or the JJC, which is the copper ETF. All very similar, very, very weak. Copper's had a nice decline. Today it staged a little bit of a snapback move, which is understandable when the dollar went down a lot. But all you have to do for copper right now is just watch the U.S. dollar index. When the U.S. dollar index falls, copper will get a little bit of a bid, but it's very, very weak. It's technically broken, and I ultimately think we're going down a lot lower in copper very, very soon.
Okay, and let me back up just a little bit. Technically broken. Open that up for us.
Okay, well, you put a little bit of a right around in August, August 1st, in fact, we were trading up around 450. We've moved sharply lower on August. Obviously, the stock market bottom around August 9th. Copper was trading basically around the 380 level, or just about 382. Now we went down there. We we went and almost tested that yesterday. Today you got a little bit of a bounce, but if you look at the charts, we're below all the major moving averages on the daily chart, and basically we're just looking for a little sideways action here, and then if copper sets up any bearish pattern, I think it sells down to the 370 and ultimately 345 levels.
Okay, and I pulled up a longer term, a monthly chart.
Okay.
This thing looks like it's got a distribution pattern that started back in January, and if it breaks last month's low, there's nothing there until what?
$3, or a little bit lower, 375.
Yeah, futures 272 back to June 2010 low.
Yeah,
there's nothing there. I mean,
yeah.
So this could be a heck of a moneymaker.
Yeah, I mean, it's already been pretty good, since August. I mean, it has had a nice drop already. We've only had a 2-month decline. So, I mean, ultimately, we could look at 275, 250 before this is all over. I wouldn't be surprised to see a 1-year bear market for copper.
Okay. How are you planning on playing this if it does break? Options, futures?
You could trade futures or options would be a play. For those of you those out there that don't have a futures account, you could probably look to try to short the JJC or buy puts on the JJC. You could also short copper stocks, Freeport-McMoRan, Cleveland-Cliffs, and beyond copper, I think it's all industrial metals. I think steel, iron ore, stocks like Cleveland-Cliffs, U.S. Steel, they're all going to go lower.
I'm looking at this JJC, and is there leverage on this thing or not?
There's not much. It's tough to borrow if you're looking to short it. So I have been. You will be able to short it from time to time, but it is tough. It is a tough borrow.
Okay, it looks like it's got some support all the way down there at 37. Maybe it's at the May-June lows of 2010. Is that kind of like your target if it breaks?
Yeah, that would be. Pretty much, I'm looking at a couple of spots, actually. One would be around the 42 level on the JJC, and then ultimately it would be that June 2010 low, which was, as you said, around the 37 area.
Okay, what was that other symbol you gave me? Was it Freeport-McMoRan, you said?
Freeport-McMoRan, yeah, FCX.
Okay. Let me pull that up.
Yeah, that's another one. Look at that chart on the daily. I mean, it looks absolutely horrible.
Okay.
And this is the leading copper stock out there. So, I mean, we have support right here. You're at the 200-day moving average on the weekly chart. The market's obviously in a little bit of a bounce mode, but we cracked through here. Freeport-McMoRan could be a $32 stock before you know it.
Okay. Well, that would be a nice play, too.
Yeah, I mean, there are good setups coming up. Talk
to me about the euro intervention.
Well, today we had this coordinated effort. They're going to throw dollars in the market and basically prop up these banks. This is nothing more than what we've seen already. I think the European Union is going to have a little bit more of a tough time. I don't think they follow the same script as Ben Bernanke and Tim Geithner as we do here. So, again, I think it's just a matter of time before Greece actually does default. I can't really see this lasting much longer. If you look at bond yields on Greek debt, they've been soaring. They did come down a little bit with this intervention, but overall, this is just a Band-Aid. That's all this is. This could, maybe hold things up for a month at best.
I was going to go there with you. Do you think in about a month they'd string this thing out?
I don't even think it lasts that long, Michael, to be honest. But I guess it could. But honestly, I'm not even in that camp. I mean, if we don't drop within the next 10 days, I think, mid-October, we really sink.
Yeah, I've got, like I've been saying before, and I'm with you on the cycle date coming up. My date is specific, the 16th. And
yeah, I'm looking more at the 18th.
Okay.
Around that area, but
well, that's Sunday.
Yeah, that's Sunday. So you figure Monday, and then you have the Fed meeting. So maybe it will get held up till Wednesday. A lot of times around the Fed meeting, the markets will be a little bit more calm or a little bit tame, thinking, they may linger that QE3 out there a little bit, but they can't do QE3 at this stage.
No, I think that, yeah, I'm in agreement with you. I think that it's not a matter of if, it's a matter of when, and when is really the big question. But how much is the third part? How much interconnection do these other banks, Spain and Portugal and Italy, have with, I mean, remember 2008? Nobody knew how deep that thing ran.
Right. And we're in the same type of scenario. It could actually be worse because we have our own central bank and we have banks here like J.P. Morgan, Bank of America. We don't know how much they own of that stuff. So this can really be systemic. In fact, the Fed basically, the central bank announcement today by the ECB and, the Fed basically told us this is serious, or else they would never interject the way they did today. So, basically I looked at today's news as a real negative sign. Not that I trade ever off of news. I only trade off price action, thank goodness. But this is a major negative for the markets. So
beware over the weekend.
Absolutely. Beware over the weekend and beware over the next month because this is big. I mean, this is much worse than I had really anticipated in the beginning. I said, wow, I don't know how they're going to solve this European crisis, but this is serious business.
Well, do me a favor and put something up about because it's going to reflect in the interest rate markets. Put something on the social network for us with that, will you?
Sounds good. I will do.
All right. Thanks, Nick. We'll talk to you next week.
Thank you, Michael. Take care.
You too. All right, everybody. Nick Santiago, President, CEO, In the Money Stocks. Go to inthemoneystocks.com and watch him trade. We'll be right back.